I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It's Thursday, March 4th. Still cannot believe it is March already, but here we are. The volatility and the choppiness continues, and we expect that to continue as we wrap up this week's trade, and certainly into next week's trade as well, with the USDA report just right around the corner. And I think once we get past that, volatility likely stick around as we move through the spring and we get a lot of jawboning back and forth between the weather throughout the Midwest and how that could potentially impact the crop development and planting progress going forward. Got three markets today: corn, soybeans, and wrap it up with live cattle. We've got corn pulled up here first, so we'll start with that one. I drew some blue lines on here. This is very scientific. As you can see, blue line, blue line, blue line, blue line. What do all these have in common? Well, higher highs, higher highs, higher highs, higher highs. We did not get a higher high here. So for the bulls in the market, this is a bit of a caution flag. The trend and the path of least resistance has been higher, but we're starting to round out a little bit, which is a caution flag. Significant support comes in 517 to this 522 area. This is a spike low from February 11th. Break and close below there would mark lower lows. And that could potentially really start to accelerate the trend in the opposite direction and get a reversion to the mean, especially with the way that the funds are positioned. We've been talking about the funds for a while. They've been pretty good at defending their net long position, but again, break and close below here could start to shift that sentiment a little bit in the near future and potentially take us below that psychologically significant $5 handle. Right here is the January 25th. That was a spike low, and that took us, where did that take us to? 494 and a quarter, I believe, 495, somewhere in that ballpark. So if this gives way, could accelerate below that $5 mark. Obviously, a lot could happen between here and there, but those are the significant levels that we're looking at. Until then, I think there's a lot of great trading opportunities on both sides. Usually when we get a choppy trade, we like to equate that to a trader's paradise, but this is far from a paradise. The overnight sessions are really tough to get a grasp on, and we're not in a clear, defined range, so it's more like a conundrum than a paradise, but nonetheless, plenty of opportunities for players on both sides of the market. Now, moving over to soybeans, we've got May soybeans pulled up here, $13.93 to $14. That's been the pocket we've been talking about for the past month and a half. That was resistance. It now becomes support. We've tripped below here a few times, but it has been in the overnight session, and you've got to take these overnight sessions with a grain of salt because there is very low participation. When the floor opens, you get more participation, and volume confirms price. We've been able to defend this pocket to the upside when we get more participation, which continues to give the bull camp a little bit of an advantage here in the near term. We got that move higher today against technical resistance that we laid out near 1433 to 1435. We laid that out in this morning's Grain Express. See if I can pull that up here. Let's see, here we go. Yeah, first resistance, 1434 and a half. 1436 and a half. So long as we can defend $13.93 to $14, we could see an extension towards the top end of the recent range, 1434 to 1436. That's what we got today. We weren't able to get out above there. Potentially some profit taking against that level. But also we had a kind of a risk-off afternoon across the markets. Jerome Powell spoke, and that kind of caused a tizzy and a risk-off atmosphere in a lot of markets. So I wouldn't read a whole lot into the negative close. It's certainly not pretty, but a lot of other markets were selling off at that time, so it wasn't just a soybean thing. There are other markets at risk. Now, moving over to livestock and live cattle, to wrap things up, we've got the April contract pulled up here. We had been talking about 119.40 to 119.90 being significant support. This is previous resistance and the breakout point from January 22nd. We wanted to be buyers here. We were buyers here, and we still have some net long positions on for clients, but we haven't got that springboard reaction that we really want to see to the upside, and that is a caution flag. There's minor trend line support here, but really not a whole lot until this 50% retracement at 1755 and below there. Trend line support coming in at 1650. We need to see the cash market really firm up. We thought that the cash and the board would work a little bit closely and better together. Cash hasn't done anything. It's forced the board to come under pressure. We need to chew through some of these cattle to really get the cash to work higher over time, which we're still optimistic on over time, but a little bit of a damper here in the near term. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures from the Chicago Board of Trade. Remember, trading futures and options involves substantial risk of loss. It's not suitable for all investors. Thanks a lot.